When we talk about working from home, which is one of the recommendations, of course, even President Uhuru Kenyatta had mentioned this, what sorts of steps have you taken as the bank in order to try and make sure that maybe some of your staff is actually able to work from home, for instance?
There are a couple of steps that we've taken. One of them is make sure that they've got laptops. Okay, they've got and we have got work-enabled laptops. And our laptops, you cannot serve the internet with them, so it's work-enabled laptop. And then there's a device that we've got in the laptop that allows secure access to the system. So to the banking system, we have to make sure that that is available, that secure access is available, so that you're not you can only work within our environment. Yeah, and also that device allows us to monitor what you're doing with it. So it's a very secure environment. I said for us, data is very, very important. You want to make sure that even if you're working from home, customer data is protected, and making sure that our staff know that obligation. They have an obligation to realize, because you're working from home, you also have an obligation, and matters of data leakage is going to be taken very, very seriously. So that's another action that we've enabled, and then also we facilitate that by availability of bundles, and most of the staff that we should work from home have got work provided headphones. So work provided headphones, and then they've got bundles to be able to access the internet. So those are some of the measures that we have taken.
So as we were just chatting before we actually started the interview, you were telling me about the percentage of your workforce that is now able to work from home. What is that like?
I think we're going to get to 50% if we can get most of the people, especially in our head office, we can be able to work from home. That would be great. The branches is a different story. The branch is going to be informed a lot by the traffic.
Yes.
And we've seen that has reduced this week, definitely. Definitely this week it has reduced. We'll see how that pans out in the coming week. But we also want to be in a space to say we also need to look at the branches, because it's a health issue. If something happens there, what do we need to do, and how do we operate in that environment? So we're also conscious that we have to be conscious about that as well, and we have to look at how we can facilitate that as well.
So moving away from just the news of the pandemic and of course the details surrounding that, if we take a bird's eye view at the banking sector in Kenya, we have seen a lot of consolidation. We've seen a lot of banks that are moving to come together to form a larger entity over the past year, especially 2019 and mid-2018. We saw that trend. Of course, you have decades of experience in the banking industry. You've worked in Singapore and the likes. What do you think in terms of where we're heading as the banking sector in Kenya then?
It's only I think it's good when you talk about consolidation. It's good to have stronger bank institutions, because then it helps the entire economy. I think that's a mandate. That's a drive that the governor has been driving very hard, especially not forcing the consolidation, but normal consolidation where banks are coming together. So it's good for the industry. It's good for the country as well. It's good to have solid banks, and it's good to have fewer solid banks that can help. I think so. It's not just for the industry, but for the country as well. And I think naturally that's the future. We've seen countries like Nigeria. At one point, Nigeria had over 100 banks. Now they're down to 22 banks. So it is good for the industry, and that's the future.
Okay. Yeah. And there's great uptake of mobile loans from Kenyans. It almost seems as if that seems the easier way than the traditional loans. Do you think that that's a space that perhaps it needs more sort of regulation?
I think it's in terms of, I would want to say is, how do you ensure that the people, because when you look at, and the data is there, when you look at the number of people being listed, they are in thousands. So they tell you something that is not right. And it's our responsibility to make sure, how do we get that right? If you look at the statistics also telling us a lot of young people are being blacklisted. Now, when you think about the way this country is going, very soon to do anything, you'll have to get your credit reference.
Yes.
Now, if you're being listed at 25, what does that mean for your future? So it's something that we need to be aware of, that we don't do irresponsible lending, and then we do irresponsible lending, you list masses of people, because you're messing up their future. If you look at jobs, for instance, jobs in the government, there are quite a number of jobs that say get a CRB reference, a clearance certificate. Now, if you got listed at 25, it's very difficult to go and explain why you got listed when you're so young. So it's something that we are conscious of. I think for us as Standard Chartered, we strongly believe in responsibility. responsible lending. We believe in responsible lending. So we'll always challenge to see, does the business really exist? This money that you want to take, what is it for? If it's an individual, it's always good to encourage that there's an underlying asset of why you're borrowing. Because that's important. Because that's where then you create an environment. You create a country that is sustainable, that debt market that is sustainable, and that benefits everybody else. So mobile lending was new. It was new in this market. I think it's time where we need to look at and say, are we treading in the right direction? Is this how we want to go about it? I think it's an important question that we need to answer.
True. When we talk about Standard Chartered and your plans for 2020, I'm sure, of course, now there are some disruptions in that particular vision. But maybe you can just give us a glimpse of what that was like anyway.
I think in terms of, I've said we've got 5 strategic priorities. The first is transforming and disrupting with the digital. In terms of our investment in the digital space, in terms of our investment in technology, that is going to continue. We don't see, even if there's a temporary pause, I wouldn't call it stop, because you can't stop with this. It's an area that we're going to invest in. And also, we believe that how do we facilitate even more how do we even facilitate more technology-based businesses? We still have to look at, if you take for retail, for instance, we still have work to do on the lending side. A lot of you can open an account today with our mobile, but you cannot apply for a loan on mobile. So there's some work we need to do there. We also need to do work on the business banking side. You can apply on paper, but you cannot apply on mobile. So there's some work we need to do there. We've done a lot on the wealth space. So in terms of the investment, whether it's on the insurance, we've all put that on mobile. But in terms of, so there's work to be done. And that's the same thing for the commercial side, the commercial and CIB side. There's still work to be done, especially in the what we call the APIs, where there's connectivity between ourselves and the individual companies. So that is going to continue. The second priority for us is on the corridor. We call ourselves a network bank because we are the only bank in this market that is in Asia, the Middle East, Europe, and the Americas, and within about 16 African 16 African countries. And we are starting to see businesses coming from Asia wanting to invest in this part of the world. How do we facilitate? How do we help them? Because we understand we're in both of the countries. We're also seeing businesses in Kenya becoming regional. They want to move to markets like Tanzania or Zambia or Uganda, markets we have a presence in. How do we help them? Because today, most of those companies, they want to have one treasury. They want to have one finance manager. So how do we help them facilitate that? So the corridor business is very, very important for us. And for us strategically, it's an area that we're going to continue focusing on. When you talk about wealth investment, giving Kenyans an alternative. Before, when you wanted to save your money, you only thought of a savings account. But now, giving you the platform to invest not only in a fixed deposit, you want to invest in treasury bills, treasury bonds, you want to go offshore and in offshore markets, we can facilitate that. You want to save via insurance, bank assurance, farewell insurance, home travel, we can facilitate all that down on mobile. So that's an area that we believe will continue driving forward. And when we see the returns from that area and the growth that we have seen over the last 3 years, it tells us it's something that has resonated with our clients. It has resonated very well. From less than 19 billion shillings investment, we ended the year at 69 billion shillings. That's phenomenal growth, giving the Kenyans the alternative. And then overall, how do you then lead to improved productivity? If you have to, once you invest in technology, the return has to be, the clients have to see, oh, there's a return coming in by you not charging me more. You're not always rushing to increase your prices. Yes. That's important. So improved productivity is also an area that we need to track with all the investment we are doing. That's an area we focused on well.
Well, thank you so much for joining us today and, of course, giving us a lot of insight into Standard Chartered, the numbers, as well as some of the measures, of course, that you're taking with regards to the pandemic. So we really appreciate your time.
Thank you very much.
This is KTN.